Something unusual has been happening in Nevada over the past decade. And if you've been watching the housing market closely, you've probably noticed the numbers just don't look real anymore. The median home price in Nevada has more than doubled in the last 10 years, with some areas like Las Vegas and Reno seeing even steeper climbs. It's easy to assume this is just another real estate cycle, but when you dig into the numbers, you start to see how dramatic and sustained this growth really is. The price per square foot has jumped well beyond national averages, and the speed of appreciation is outpacing almost every neighboring state. So what's actually causing this boom? It isn't one single factor. Nevada has become a magnet for out-of-state buyers, especially people moving from high-cost states like California, Oregon, and Washington. They're coming with higher incomes, more equity from selling expensive homes elsewhere, and they can outbid local buyers without hesitation. That new wave of competition pushed prices higher than local wage growth could ever keep up with. At the same time, Nevada's housing inventory has stayed extremely tight. Construction slowed down dramatically after the 2008 housing crash and never fully recovered. For years, fewer homes were being built than the number of new residents moving in. That imbalance of supply and demand created intense bidding wars for every property on the market. Investors have also played a big role. Large investment groups began buying up properties in cash, turning single-family homes into rental portfolios. This removed available homes from the market and pushed prices even higher. And because Nevada has no state income tax and relatively low property taxes, it became a particularly attractive place for investors to park their money. All of these factors layered together created a perfect storm. Rising demand, limited supply, aggressive investors, and tax-friendly policies fueled price growth that now feels unstoppable. The numbers aren't just abstract stats. They represent real pressure on families trying to buy their first home, on renters watching prices climb every month, and on communities changing faster than they can adapt. To understand why Nevada's housing prices have surged so fast, you can't ignore what's happening just across the border. California has been one of the most expensive real estate markets in the entire country for decades. As home prices there reached record-breaking levels, many Californians started looking for alternatives, places that offered lower costs, lower taxes, and more space. Nevada became the top destination. For a Californian selling a modest home in Los Angeles or the Bay Area, the profit they walk away with can be massive, sometimes several $100,000 in equity. When they take that money and enter Nevada's housing market, they suddenly have the power to outbid local buyers with ease. What might feel like a bargain to them is still far above what most Nevadans can afford. This flood of cash-rich buyers has tilted the market in their favor and pushed prices higher across the board. It's not just individuals either. Entire companies have relocated from California to Nevada to escape heavy regulations, high operating costs, and steep state income taxes. Tesla's Gigafactory near Reno is a prime example, and it brought thousands of new workers into the area. When big employers move, housing demand skyrockets, and prices follow. There's also a cultural ripple effect. Californians often expect certain amenities, styles of housing, and standards of living that developers in Nevada now cater to. That means new housing projects are often built to appeal to wealthier out-of-state buyers, not local first-time homeowners. Over time, this shifts the entire housing stock toward higher prices. The California effect isn't just about geography. It's about economics colliding with opportunity. When a large group of people with more purchasing power enters a smaller market, they reshape it from the ground up. Nevada is living proof of that. The result is a housing market that feels out of reach to locals who grew up there. While the influx of new residents has boosted Nevada's economy in some ways, it's also created fierce competition, rapid gentrification, and skyrocketing costs. This migration wave shows no signs of slowing down, and unless supply grows quickly, prices will likely continue to climb right alongside it. One of the biggest reasons housing prices in Nevada have climbed so aggressively is simple. There just aren't enough homes to go around. Economists call this an inventory crisis, and it's at the heart of Nevada's real estate market. For years, Nevada's population has been growing faster than housing. Thousands of people have moved lower taxes, business opportunities, and a warm desert lifestyle. But while the demand surged, construction lagged far behind. After the 2008 housing crash, many builders went out of business or pulled back dramatically, leaving a huge gap in development. It took years for them to recover, and by then, the wave of new residents had already arrived. This shortage of homes means every property that goes on the market sparks intense competition. Buyers end up bidding well above the asking price just to secure a deal. Investors, both local and out of state, swoop in with all-cash offers, pushing prices up even further. Ordinary working families are left behind, forced to either rent at skyrocketing rates or move farther and farther from job centers. Zoning rules and land use restrictions make the crisis worse. Many cities in Nevada, especially around Las Vegas and Reno, have strict rules that limit how much housing can be built on certain plots of land. There's also the issue of available land itself. Much of Nevada is owned by the federal government, leaving only small pockets available for private development. That drives up land costs, which then drives up housing prices. Construction costs have also risen sharply. Lumber, steel, labor, everything costs more than it did just a few years ago. So even when developers do build, they have to sell at higher prices to make a profit. Affordable starter homes are no longer worth building in the eyes of many developers, who instead focus on luxury units that promise bigger returns. Put all of this together, and you get a perfect storm. Low supply, high demand, and rapidly escalating prices. Until Nevada can build a lot more housing, and fast, this inventory crisis will continue to squeeze out local buyers and push prices to new record highs. A major force behind Nevada's skyrocketing housing prices isn't just families looking for homes, it's investors. Over the past few years, Nevada has become a magnet for real estate investors, and their buying habits are reshaping the entire market. Large institutional investors, private equity firms, and real estate investment trusts have poured billions into Nevada property. They see homes not as places to live, but as financial assets to generate steady returns. After the 2008 housing crash, many firms realized they could buy foreclosed homes cheaply, fix them up, and rent them out for profit. That strategy has only grown bigger and more aggressive since then. In cities like Las Vegas, entire neighborhoods have been snapped up by investor groups. Instead of those homes going to first-time buyers or local families, they become rental units owned by distant corporations. These investors often pay in cash, which gives them a huge edge over regular buyers who need mortgages. Sellers almost always choose the fast, guaranteed cash deal, and that pushes prices higher with every sale. Even smaller mom-and-pop investors have jumped in, buying second or third homes to flip or rent on platforms like Airbnb. With short-term rentals offering massive returns in tourist-heavy areas, investors can afford to pay more upfront, which again drives up property values. The problem is that this frenzy pulls homes out of the traditional housing supply. Every house that becomes an investment property is one less house available to someone who actually wants to live there. It also changes how pricing works. When homes are treated like stocks, their value gets tied more to speculation than local wages. This has created a feedback loop. Rising prices attract more investors hoping to cash in, and their buying activity raises prices even further. Locals get priced out, rents climb, and housing becomes less about shelter and more about profit. Until policies are put in place to slow down speculative buying or encourage owner-occupied purchases, this investor frenzy will continue to make Nevada's housing market feel like a casino. High stakes, fast money, and increasingly out of reach for the people who actually call the state home. Nevada's world-famous tourism industry isn't just filling hotels and casinos. It's also quietly reshaping the state's housing market. Cities like Las Vegas and Reno attract millions of visitors every year, and that constant flow of tourists has created a massive demand for short-term rentals. What started as a side hustle for homeowners has exploded into a full-blown industry. Platforms like Airbnb and VRBO have made it easy for investors to buy up houses and convert them into vacation rentals. In popular tourist zones, entire streets are lined with homes that are rarely occupied by long-term residents. They're booked week by week, sometimes even night by night, for out-of-town visitors. This shift has had a huge impact on housing availability. Every home that becomes a short-term rental is one less property available for local families. And because short-term rentals can earn far more money than traditional leases, investors are willing to pay much higher prices up front to secure these properties. That bidding pressure has pushed housing prices up across the board, especially in neighborhoods near entertainment districts, downtown areas, and scenic spots. It also distorts the market in more subtle ways. Developers who see the high profits from vacation rentals often build new properties specifically for that purpose, further reducing the number of homes aimed at permanent residents. In many parts of Las Vegas, for example, newly built townhomes and condos are snapped up by out-of-state buyers who never intend to live there. They just want the rental income. Meanwhile, the constant tourist turnover changes the character of these communities. Streets that used to be filled with neighbors now feel like revolving hotel corridors, with strangers coming and going every few days. This drives locals away, which in turn makes these areas even more dependent on tourism money instead of long-term stability. The end result is a housing market that behaves more like a business than a community. Tourism has brought incredible economic growth to Nevada, but it's also created intense competition for housing and driven prices beyond what most locals can afford. As long as short-term rentals remain so lucrative, they will continue to drain supply from the housing market and keep prices high. At first glance, Nevada looks like it has endless space. Drive through the desert, and you'll see miles of open land stretching toward the horizon. But here's the catch. Most of that land isn't actually available for housing. In fact, around 80% of Nevada's land is owned by the federal government. That means only a small fraction of a state can be developed for private housing. And that scarcity is one of the biggest reasons prices are climbing so fast. This land lock creates a classic supply and demand imbalance. With limited buildable land near cities, the price of every available acre skyrockets. Developers who want to build new housing have to compete for those rare parcels, and they pay a premium to get them. Those costs get passed straight to buyers in the form of higher home prices. The problem is especially severe around fast-growing urban areas like Las Vegas and Reno. These cities are surrounded by federal land managed by the Bureau of Land Management. To expand, they need that land to be released for private use, which requires a long and complicated federal approval process. That red tape slows down development and keeps the supply of new homes far below what's needed to meet demand. Even when land is available, local zoning laws and infrastructure challenges add more barriers. It's expensive to bring utilities, roads, and services out to new developments on the edges of the city. So instead of building affordable starter homes, many developers choose to build luxury communities where they can make a bigger profit, further raising the average price of homes. This land lock also fuels speculation. Investors buy up available parcels and hold them, betting they'll be worth more in the future. That hoarding reduces the amount of land on the market even more, pushing prices higher. The end result is a housing market where land scarcity drives everything. It doesn't matter how much empty desert surrounds Nevada. If it's not legally available for development, it might as well not exist. Until more federal land is released or local governments find creative ways to work around these restrictions, the land lock will keep squeezing supply and pushing home prices higher year after year.